Right, so welcome to Model 12, Financial Statement in the Public Sector. Now, so in the last model, we looked at the International Public Sector Accounting Standards, and we look at the various overview of the International Public Sector Accounting Standards. Now, the International Public Sector Accounting Standards include the following, so I've listed them down there. IPSAS 1, Presentation of Financial Statements, IPSAS 2, Cash Flow Statements, IPSAS 3, Accounting Policies and Change in Accounting Policies, IPSAS 4, the effect of changes in foreign exchange rate, IPSAS 5, Borrowing Cost, IPSAS 6, Consolidated and Separate Financial Statements, IPSAS 7, Investment in Associates, IPSAS 8, Interest in Joint Venture, and a lot of them there. And so now what you must understand in relation to the IPSAS is that they are just like the accounting standards, okay? They are just like the international accounting standards. So when you come to IFRS, if you look at something like, let me see what we have there, something like borrowing cost. Borrowing cost is IAS 23. But when it comes to IPSAS, it is IPSAS 5. That is the borrowing cost. Then when we come to leases is IAS 17, but when it comes to IPSAS, it is IPSAS 13. Then issues about property, plant, and equipment. When it comes to IPSAS, or when it comes to IAS, it is IAS 16. But when we come to IPSAS, property, plant, and equipment is IPSAS 17. Investment properties is IAS 40, but when it comes to IPSAS, it is going to be IPSAS 16. So note that when you are strong, once you are strong in financial reporting, you know about the financial reporting standards. It is the same thing that you're going to be applying here when it comes to the IPSAS. Now, so let's look at IPSAS 1, Presentation of Financial Statements. Now, this is the same as what you know in IAS 1, that is Presentation of Financial Statements. The objective of financial statements is to providing information about the sources, allocation, and uses of financial resources, providing information about how the entities finance its activities and meet its requirements, and all of these there. The components of the financial statements include the statement of financial performance, that is the statement of profit or loss, statement of financial position, which is the same as the balance sheet, the cash flow statement there, and then statement of comparison of budget and actual amounts. This is what I told you to look out for. That is the statement of comparing the budget with the actual result, so that we get what? The variance in relation to that. Then accounting policies and notes to the financial statements in relation to that. Then we also have qualitative characteristics of financial statements also. Then I included also the formats of the statement of financial performance. That is what we know as the income statement, or what is usually known as the income and expenditure account. Now, when it comes to the public sector, the accounting in the public sector, so let's put public here and then let's do private here. Then let me do this way. Let me go this way rather. Right. So let me put the item here. Let me put the public sector here. And then the private sector here. Now, so when it comes to the financial statements, when we talk about cash, recording cash transactions, the public sector prepares what we call the receipt and payment account. Okay, the receipt and payment account. But the private sector prepares what? The cash book, or what we call the cash account. Then when it comes to financial statements, we have what we call statement of financial performance, statement of financial performance, which is the same as the income statement and statement of financial performance also in the private sector. Then also, but when we come here under the public sector, the statement of financial performance here records the revenue and expenditure. So we will look at the revenue and what? Expenditure account. So if you look at the format I provided there, the revenue include taxes, fines, and licenses, revenue from exchange transfer, transfer from other government entities, then other government revenue. So all these are the revenues, we bring them. Then we look at all the expenditure, that is wages, salaries and emoluments, grants and other transfer payments, supplies and consumables used, depreciation and amortization, impairment of property, plants and equipment, other expenses, finance costs. So what is going to happen is that in the statement of financial performance in the public sector, you are going to be getting what we call surplus or deficits. So when you prepare the revenue and expenditure account, you will get surplus and deficits. But in the private sector, when you prepare the statement of financial performance, you are going to get either profit or what? Loss. So you're going to get a net profit or loss, and you're going to bring your revenue, you less cost of sales, you get gross profit, you add other income, you less all expenses, then you get your net profit. That is how the statement of financial performance is prepared in the private sector. But in the public sector, we look at the revenue and expenditure, and the difference will either be a surplus or a deficit. Then the next thing is the statement of financial position. That is the same as the balance sheet. Now, if you look at your formats also, I provided the balance sheet in the public sector. So we will bring current assets, which is going to include cash and cash equivalent, receivables, inventory, prepayments of expenses, short-term investments. You see, it is just like the private sector. It is just like the private sector. Then we bring all the non-current assets, long-term investments, infrastructure, property, plants and equipment, long-term receivables, other financial assets, land and building, intangible assets. Then we bring all our liabilities, payables, short-term borrowing, provisions, employment benefits, superannuum or retirement payment. The non-current liabilities, we're going to bring the long-term loan, we're going to bring other loans. So that is also going to give us the net assets of the company. But when we are preparing the financial position in the public sector, we're going to bring what we call the accumulated fund, or what we call accumulated results. You see, in the public sector, there is nothing like capital, but in the private sector, you're going to bring capital. You know, in getting the capital for the private sector, you're going to bring the stated capital, you're going to bring your retained earnings, then you're going to add your profit to the retained earnings that was already there. But in the public sector, you're going to bring your accumulated results or accumulated fund from the beginning, then you add any surplus or deficit from the revenue and expenditure account to it, and that will give you the accumulated surplus or the accumulated fund or results for the year ended. So take note of that very well. Then, so that is about cash book, receipt and payment, financial position, revenue and expenditure. The difference will be surplus or deficit, but the difference here is net profit or loss. Financial position, we're going to have accumulated results or accumulated fund, but we're going to have capital here. But there are key workings that we need to do when we are preparing the financial statements for the public sector. Some of the key workings, I've listed all of them in your notes there, so look at the workings there and then let's look at it. So we're going to do workings for direct tax. That will include tax paid by individual, tax paid by corporate, miscellaneous taxes, and then any tax that is receivable. So sometimes in the notes the examiner will state that, or may state that, tax receivable but not yet received, or tax due to be received, or direct tax due to be received is 5,000 but has not been received yet. We need to still add it to the direct taxes. Then indirect taxes will include general taxes on goods and services, excise, custom and other import duties, taxes on exports, levies, and any receivables. Remember when we were doing revenue and expenditure, or when we were doing sources of government revenue and government expenditure payment processes, I told you to take note of that, because if you know all the sources of government revenue, you will know how to distinguish between direct taxes and then indirect taxes. Then we're going to have what we call the non-tax revenue. This will include property income, revenue received from the sale of goods and services, fines, penalties, and forfeitures, and then miscellaneous taxes. These are non-tax revenues. And then you're going to have issues such as grants. So all the workings in relation to employment compensation, I've also included that there. Goods and services, all the workings are there. Subsidies, grants, all the workings are there for that. Then the final statement is the cash flow statement. Now, when you are preparing the cash flow statement, whether in private or in the public sector, you're going to prepare the cash flow statement from the operating activities, investing activities, and then financing activities. Now, you're going to do the same thing in the private sector, and you're going to do the same thing in the public sector. But in the public sector, the preparation of the cash flow goes this way. We bring cash flow from operating activities, then we bring the revenue that we have received during the year. So the tax revenues and all the non-tax revenue will be brought. Then we will list all the payments that has been made during the year for employment, for interest that has been paid, and any other payment that has been made. So that is what will amount to the operating activities in public sector. Okay? So when you are preparing the cash flow statement, public sector, you are indirectly preparing the revenue and expenditure accounts when it comes to the operating activities. So at the operating activity segment, you are indirectly preparing the revenue and expenditure accounts, because you will bring all your receipts, then you bring all your expenditure. The net figure will give you the net cash flow from operating activities. Then you bring investing activities. This will include issues such as proceeds from fixed assets acquisition, proceeds from the sale of fixed assets, purchases of fixed assets, proceeds from the sale of fixed assets. Now, proceeds from the sale of fixed assets is an inflow, so you're going to add it, but the purchase of fixed assets is an outflow, so you're going to subtract it. Purchases of foreign currency securities, then proceeds from the sale of investment properties and other investments will also be brought. Then we come to the financing activities of the cash flows, and that is going to be cash from borrowing, payments of borrowing, dividend payments, and all other issues that relates to financing. So all long-term debt repayments and all long-term debt received will come under the financing activities, and that is what the cash flow statement also is about. Then there is what we call notes to the cash flow statement. I have also provided the formats for the notes to the cash flow statement and how we're going to do the reconciliation. So let's look at our first question in relation to preparation of these financial statements, whether we're going to prepare receipts and payments, revenue and expenditure accounts, the balance sheet, as well as what the cash flow statement for the country.